Okay, Ajay Shrivastava joins us now, and Ajay, good morning. Thank you for joining us. When my guest coordination team confirmed that Ajay Srivastava is happy to join on 1st of Jan, I got excited, but that also got me wondering that is Ajay getting too old to party? How come he's agreed to join us on 1st of Jan?
No, it's being my wife putting me in the corner and saying, you didn't make enough money for the year, you don't get a New Year holiday.
Oh, how nice. So what is your New Year resolution this year? Make money for your wife, or keep your wife happy, or make more money?
Both run together. Both run together. And I think this time we'll be lucky. You won't find me in the chair next year on 1st January. I'm quite sure about it.
Because you'll make enough money and you'll be off for holiday. Is that what you're hinting?
Well, life is looking good. Markets are good. You can't get a better set of situation walking into 2019, with hardly any worries to contend with. Not a bad place to be on a 1st January morning. It could have been a lot worse. It's a lot better. It can't get better than this. Oil, rupee, dollar, you name it. Everything is working in your favor in this market. I think we've got to be really unlucky to lose it in 2019. I think it's just working so perfectly for India. We are set up so beautifully. The weak hands are out. Oil is at a low. Rupee is steady. Interest rates are down. You can't get a better situation than what we are today. And it's a lovely place to be on the 1st January. Little worries, lots of optimism.
News and good prices don't come together, Ajay. Only, if I want to put cold water, and in Delhi, you should not use the word cold in a winter morning. But if I want to pour cold water on the Optimism, the news is great and stock prices have reacted. What happens if the turn of events, they start deteriorating? Because oil is unlikely to go down. The fact that bond yields have come down from 8.23% to 7.3%, that's unlikely to correct. You may not see a lot of selling from FIs also, because globally also the flows have stabilized after US Fed communication. So if the news is great and if the news has failed to take the market to an all-time high, I wonder what happens if there is a little bit of slippage on the news.
Well, okay, you're right, absolutely good. But the way to look at it perhaps is that the global markets went through serious turmoil in the last 2-3 weeks. We still held firm. We didn't see large sales selling coming from FIs at this point of time. We're not seeing domestic investors selling off. So yes, the news was pretty bad from the global front. We stood firm. I say that, yes, lots of interest, things could have stabilized. Oil may not go down much more than this. But I think what it does to the people is, gives them a little bit of confidence to spend money. What's missing link in the whole thing in India is consumer spending. We're not spending enough. We're not buying enough cars. We're not buying enough stuff. And therefore, we are having a problem of every company reporting very lackluster sales. The only worry for India, and continues to be, is the core industries. They're not performing at all at this point of time. But we believe that at the end of the day, that whenever new dispensation comes in the May, June, July, something will start to happen in that sector. It can't go worse than what it already is. So, having said that, I think it's all about psychology of a consumer. If you're feeling a lot better, you will spend a lot better, and we'll have an economy roaring. Forget the headline 7.5% GDP growth. Nobody, it may not be happening or may be happening, one doesn't know. The real trick is, are people buying enough cars? Are people buying enough houses? Are people spending enough money? And I think that's the trick was missing in the last 6 months. Possibly it will come back. There's more money in the wallet. Your oil prices are down, petrol prices are down. There's more money in the wallet. And therefore, we expect consumer to come back to the market and spend. Indications, look at the airfares, look at the hotel prices. They have not been cheap by any standards. I think we have turned the corner for consumer sentiment and spending, which should give a lot of fill up to this market.
Ajay, a very happy new year from Tanveer and me as well. Hope you were flying in all sorts of spirits, no pun intended here.
Thank you.
Okay, but just on the point that you're making...
I know where the questions are going.
No, not that way, not this time. But you were talking about consumer sentiment. Ajay, what makes you optimistic? Because you're not really seeing the real economy data show any kind of meaningful recovery, be it the auto dispatch numbers, and we will soon see those numbers trickle in already, or the cement numbers, or the steel volume data. All of it is lackluster, and that's been the case for the last 3 months now.
I'm not arguing against that. All I believe is, I think it's turning. And I think the starting point of any turn is, what you see happens to real estate market. That's kind of now stabilized and is moving up. That's one thing. Consumers should be, and I think it's too recent, the oil price reduction has been too recent, last 20 days or 30 days. That's a significant amount of money in people's wallet, should come together. And I think, the thing is, we are fearing a lot. Political instability could rock this market, globally could rock this market. I think we've gone through hell of a lot of winter storms in this last 2 months to tell us that this ship is now, stock market ship is stable, we are comfortable, and it's not going to happen overnight, but at least negativity is coming out of the system. Number two, the biggest thing, the policy framework. Look at what's dramatic change of policy framework from a tough, we know best policy, the new dictates of masses populism, whatever you may call it, is coming to a lot better. We may underestimate the e-commerce policy, but that's a decisive shift in the way the political masters think about the economy. And I think it's a great news because it was lacking. There was lack of empathy with respect to the MSMEs. That's come together. Lack of empathy vis-a-vis domestic industry. That's come together. We are getting more supportive political establishment at this point of time. So the signals are all coming together that, listen, domestic economy is important, domestic consumer is important. It's not all about what the foreigners think we should be doing. It's all about what we think we should be doing for our country and our people. I'm honestly saying this, FDI policy, etc. on e-commerce is reflective of the new sentiment saying this is going to be a very supportive year for Indian economy, Indian industry, with no disruptive activities at any point of time. We can ask for the moon, but this is amazing stuff, what we are seeing. I love political instability because that's what makes political masters accountable. So let's take the positive out of it.
Okay. And Ajay, how do we do that? Because, the view is that next 6 months, the markets will be volatile in the run-up to the political event, and the market will give you enough and many opportunities to buy into dips. But the thing is, what is it that you buy? Do you buy more of the same, the ICICI Bank or Axis's? Or do you think in the next 6 months, there will be a big sectoral churn, and aside of Axis and ICICI Bank, there will be others as well, which will see that kind of recovery?
Now, that's interesting because I think it's going to be a very boring market. I don't think so you'll have many surprises coming through. I doubt it that you will have some major recovery through the smaller space coming in terms of stock prices. But what I see certainly is that the larger space will continue to take the most of the investment that goes into the market. That's one. Number two is you will find that the select stocks start to move. And I think we will have major moves coming in commodity stocks. We will have, as we go towards the election, if we feel the election is going to be a little bit of a kind of a problem area for this present dispensation, you will find lots of aggressive moves on the PSU at this point of time, which are really dirt cheap. You can't get these companies at this price anytime in the in your expected investment horizon. So I think, yes, the famous culprits are going to be there, the HDFC Twins, the ICICI Bank, the Axis Bank, etc., etc. They will continue to take you. But a lot of new sectors, healthcare, hospitals, tremendous re-rating is taking place in the market. You got to look at and see how the Max deal got valued. You see Apollo has already moved up. I think healthcare sector, Ayushman Bharat is, I don't know, will give hundreds of crores of profits to these to chains of hospitals over a period of time. So hospital sector is definitely a must-have. Most people don't have in your kitty. I think any sell-off in IT stocks is a must-buy. US market is robust, no issues about that. They will realize good money. At the lowest, even today, they're realizing about 73 rupees to $1. You could be very well. So I don't think sectoral churn will take place. And I think if your sectoral churn, asking only one sector left out is infrastructure, will it turn the corner? I don't know the answer to that perhaps. Maybe, maybe not. But rest of the market, pretty safe, strong to stay and add. When is the right time to add? Anybody's guess. But I think you must have the top 20 names in your portfolio. They will do the best from any industry. You see what's happened to aviation. One man is a star in the aviation. So you got to go and buy it. Liquor is the same story. Consumer, Nestle, you've seen the robustness of Nestle. It's done beautifully. So I think you have to stick to quality name irrespective of the market situation. And whether you want to bet on infrastructure, it's kind of a 5-10% allocation call.
Sure. Seems like you're raring to go, Ajay. Give us your sense on how, the instability part around the election event that you spoke about a little while back, because Nikunj made this point earlier as well. it's said that it's a big event risk, but if you look at the numbers, historically, in a calendar year, neither DIIs or FIs, and barring 96, 98, have lost money in an election year. So it's turned out to be a positive year for returns for all classes of investors. What's the risk associated with elections this time around?
See, markets have already voted. We had assembly elections expected to be, the results were expected to rock the boat because they were not in consonance with the expected policy of continuing of the present government. It didn't rock the boat. People went back to the market and bought it and said, listen, this is a wake-up call for the government, and a lot of things, good things will happen. And it's coming true. You know, it's coming true. If you look at all the new policy initiatives, whether you say out of heart or out of compulsion, whatever you want to call it, but they are good. I think any volatility which we see down the line, and when you say volatility means obviously the risk of the present government not coming back in present form and shape, I think is a tremendous positive, because that lends credence to the market that a lot more serious effort will go towards getting things in order on the ground more than on paper. You know, and well, let's put it this way. It doesn't matter which government comes to power. It's a question of global inflows, outflows, what the Indian economy is going to do. We have done pretty badly as an economy at this point of time, whether it's car sales, whether it is a core sector numbers you saw came in yesterday, abysmal coal sector numbers. You know, cement is in a docks and steel, etc., electricity. I am saying, are we at a plateau at this point of time? Is there a way we can go down further? I doubt it very much. Political instability is going to play to our favorite market, because I think it's a lot more seriousness one can expect as the governments go in. You know, we may not like loan waiver, for instance. People say, oh, loan waiver ho jayega. Arey, loan waiver is an accounting entry. Do you think you could recover this money from any farmer by any stretch of imagination? Where is the process recover? It's a book entry. So let's not get serious about the so-called populist measures and all. It's cleaning up the books. Let's worry about and say, FDI policy is good, MSME policy is good, banks are getting more liberal with money. That's the important part. That's what is rocking it. That's what is going to make this market.
All right, Ajay, appreciate your time. Have a wonderful year ahead. God bless and stay blessed.
Sorry?
No, I'm just exchanging New Year greetings with you, Ajay. And by the way, I think you just admitted what everyone does.
I'm sorry, I'm not able to get any volume. I cannot hear you at all. I can't hear you.
Okay, Ajay. In case you can't hear me, in case you can hear me, Happy New Year once again. And it was wonderful to have you on the show.
Thank you very much, and all the best to India. Thank you so much.